Ladies and gentlemen, good day and welcome to Rainbow Children's Medicare Limited's Q1 FY24 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Rahul Jeewani from IIFL Securities Limited. Thank you, and over to you, sir.
Good afternoon, everyone. I am Rahul from IIFL Institutional Equities. I welcome you all to the Q1 earnings conference call of Rainbow Children's Hospitals. From Rainbow, we have with us today Dr. Ramesh Kancharla, Chairman and Managing Director, Mr. Sanjeev Sukumaran, Group Chief Operating Officer, Mr. Vikas Maheshwari, Chief Financial Officer, and Mr. Saurabh Bhandari, Group Business Analyst. Over to you, sir, for your opening comments.
Thank you, Rahul. Good afternoon, ladies and gentlemen. This quarter has been marked by significant achievements and a growth reflecting our commitment to excellence in pediatric healthcare and a strategic expansion. Firstly, I would like to express our immense pride as Rainbow Children's Hospital, our hub hospital in Hyderabad, was awarded prestigious Gold Seal of Quality approval by the Joint Commission International, which is JCI. This recognition underscores our dedication to delivering world-class healthcare services to children and stands as a testimony to our relentless pursuit of quality. This makes us the only pediatric hospital in India to receive this accreditation of JCI. Our financial performance for the quarter and the fiscal year highlights our continued growth trajectory despite the seasonally weak nature of the Q1. We have witnessed a commendable 21% increase in the revenue driven by higher delivery numbers, pediatric surgical volumes, and an addition of the beds, at 155 beds in 2 units. Our commitment to enhancing patient care has led to these impressive numbers, with a revenue for Q1 FY24 growing by 21% to the 287.1 crore. Our EBITDA has grown by 7% to the 87.7 crore, and the PAT has also seen 7% increase, reaching 41.5 crores. While the overall occupancy rate for the quarter was approximately 41%, it's worth noting that this figure reflects the growth phase of our recently commissioned hospitals. As we continue to expand our footprint, we are confident that these new units will contribute significantly to our future growth. Our expansions for plans for the current fiscal year, with the focus on adding 270 beds across various locations. We are about to commence a new outpatient block and a modern IVF facility adjoining the LB Nagar Spoke Hospital in Hyderabad city. The expansion in Hyderabad Central City, which is Himayat Nagar, of 60 beds, an additional block in Hyder Nagar of 50 beds in addition to the existing 75 beds are expected to be operational by second half of the financial year. Our new spoke hospital in Anna Nagar, Chennai, of 80 beds, and Sarjapur, Bangalore, 80 beds, is also expected to commence operations in the second quarter of the current financial year. Another spoke hospital in Hennur, Bangalore, is expected to commence operations in about 15 months' time. Work is in progress. The construction of a regional greenfield spoke hospital in Rajahmundry, in Andhra Pradesh, of 100 beds is progressing well, is currently at the basement stage. We have completed our 100% payment to the HSVP, which is for the Gurgaon 2 land parcels, and received allotment letters. We are in the process of taking over the possession of the land. We recently signed an asset-light 125-bed greenfield hospital at a strategic location on Avinashi Road in Coimbatore. When it comes to clinical excellence, we normally do a quite significant number of long-distance transports. Last year we did about 1,000 plus long-distance transports, and of late we are witnessing a significant number of calls coming to us for the air transports. We have transported in this quarter the airlift critically ill children and newborns from Goa, Raipur, Nagpur and Visakhapatnam to our hub hospitals. The annual pediatric cardiac surgical results at Rainbow Children's Heart Institute have been on par with international standards, with a mortality of 1.5%, which includes 40% of the complex cardiac surgeries. Our focus remains offering high standards of multidisciplinary pediatric health specialty care with a comprehensive perinatal service. I also take this opportunity to extend a warm welcome to Mr. Vikas Maheshwari, our Group Chief Financial Officer, who brings over 25 years of valuable experience in corporate finance, M&A, strategy, treasury management. His expertise will undoubtedly contribute to our financial growth and strategic initiatives. With these remarks, I would now like to hand over the floor to Mr. Vikas Maheshwari, who will provide us with a detailed financial update. Thank you once again for joining us today. We look forward to your questions and insights as we move forward. Thank you.
Thank you, sir. Ladies and gentlemen, good afternoon to each one of you. It is indeed a pleasure to address you today and provide an overview of the Rainbow Hospital's financial performance for the first quarter of FY24. I am Vikas Maheshwari and I recently joined as a Group Chief Financial Officer. I am excited to be part of the Rainbow Hospitals team and contribute to our continued success. Let me now delve into our financial performance of quarter 1 FY24. Our revenue for the first quarter stood at rupees 287.2 crores, reflecting an impressive growth of 21% when compared to the corresponding quarter of the previous financial year. Our EBITDA for quarter 1 FY24 amounted to rupees 87.7 crores, marking an 7% growth compared to the same period last year. However, the EBITDA margin for the current quarter was 30.5%, which is slightly lower than the 34.6% in the corresponding quarter of the previous year. This marginal impact on the EBITDA can be attributed to few key points. As CMD Dr. Ramesh has told that we have opened 2 units recently, which is Financial District at Hyderabad and at OMR Chennai. So that has impacted the margin slightly. Other things which has impacted the EBITDA is the onboarding of the senior leadership at both the corporate and the unit levels, and coupled with the impact of RSU cost. We have also increased our expense for the branding and the promotional expenses, which is aimed for supporting our new units and the future growth of the company. And we have also carried out few necessary repairs and maintenance across our hospitals to ensure that they remain ready for the upcoming seasons. The profit after tax for the quarter 1 FY24 reached to rupees 41.5 crores, indicating a 7% growth in comparison to the corresponding quarter of the last financial year. In terms of the operational performance, both outpatient and inpatient volumes witnessed commendable growth, with increase of 11.6 and 13.9% respectively when compared to the corresponding period in FY22. The overall occupancy rate for the quarter stood at 40.9%, while mature hospitals exhibited a robust occupancy rate of 47.6%. Our newly commissioned hospitals recorded an occupancy rate of 28.1% during quarter 1 FY24. Newly commissioned hospitals occupancies lower rate shows the new hospitals which we have opened recently. We expect as these hospitals grow and walks towards the maturity, the occupancy level of the new hospitals will also reflect as we are reflecting in the matured hospitals. Our return on capital employed and return on equity for the quarter first FY24 was 7.2% and 3.8 respectively. These are non-annualized numbers. Our payer mix remains very robust and was very balanced, with 48% of the revenue coming from the insurance and the balance 52% coming from the cash patients. Furthermore, delighted to say that our international business now constitutes 3% of our total business compared to the earlier figure of 2%. I am pleased to inform that our company balance sheet remains robust with a substantial cash and cash equivalent position of 474.2 crore rupees as of June 30th of this year. This strong financial position will be instrumental in supporting our ongoing capital expenditure plan as outlined by Chairman and Managing Director. Given our current cash flow and anticipated internal accruals in the coming years, we remain confident in our ability to complete all planned capital expenditures through internal sources. During the quarter, the company has invested approximately 187 crore rupees in the capital expenditure, out of which the majority of the amount has gone towards the purchase of the land in Gurugram, which stands at roughly 142 crore rupees for the land purchase. With these insights, I conclude my financial update. I now invite your questions and suggestions. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Before we take the first question, a reminder to the participants again, if you have a question, please press star then 1 on your touchtone telephone. We take the question from the line of Nitesh Dutt from Burman Capital. Please go ahead.
Hi, thanks for the opportunity. My first question is, what is the impact on EBITDA due to the 58 beds operationalized this quarter, and also the cost that we must be incurring for the new hospitals that are going to come in?
Mohit, can you please repeat this question again? There was some disturbance in between.
Yeah, so I was saying, what is the impact on EBITDA due to the 58 beds which were operationalized this quarter, and also the new hospitals which will be coming in the second half of this financial year?
Mohit, so as far as this, whatever the new units which we have opened, delighted to tell you that the financial district Hyderabad, whatever the unit we have opened, it has done very well and it is EBITDA positive. So since it is in Hyderabad, it means the 3 months itself it has become EBITDA positive. Obviously, as the new units get opened, till time they reach to the maturity, there will be some impact on the EBITDA. But we remain confident that in the next 1 year to 18 months time, they will be reaching to 20-25% of the EBITDA. So quantifying based on the new unit which is coming up in the operational, what will be the impact on the EBITDA will be slightly difficult. But obviously there will be some impact on the EBITDA. The quantification of that is little difficult, but we remain confident whatever the EBITDA we have shown in this quarter, though the 2 units has got operational on year-on-year basis, we remain confident that the trajectory of the EBITDA should be the same.
Understood. But if we exclude the 58 beds which were operationalized, what would have been our EBITDA? So basically considering only the existing beds.
So it should have been better, Mohit. We don't quantify and give these figures, but delighted to again tell that both the units which we have operationalized, which is OMR Chennai and Financial District, combined together, both are EBITDA positive, though at the very nominal level, but it will further grow.
All right, thanks. Second question is, what is the reason for fall in occupancy of new hospitals? So even if we exclude the capacity addition, basically the new hospitals, there seems to be a fall in occupancy.
See, it's a new hospitals will take its time to build occupancies. We are actually just come out of the Q1. We're talking about Q1. Q1 is in the most matured hospitals also, would not cross more than 50%. That's because the children's, we are children's hospitals. It is a seasonally weaker quarter. That's because of it's a holiday season. Most of the families tend to go out of the cities. And also it's a relatively healthy period. That's why we see a kind of a significant drop in the occupancy levels. That's been traditionally always been like that with Q1. So what actually happens in Q1 is that we do a surgical volumes and obstetrics remains robust. Because of that, we maintain our EBITDA close to 24-25%.
And what is the occupancy that you are expecting from mature hospitals for the full year?
See, we clocked about 60 plus the last year in the matured hospitals, and maturing hospitals they are about 45, not of 45% occupancies last year. So we would expect about we have about 270 beds coming in this year for operations. That's almost like about 30% of the beds. So once they get added, still we probably look at that annualized occupancy probably about north of 50%, around 50%. So that's what is expectations, including in new hospitals. Matured hospitals, of course, will do as they're supposed to do, north of 60%.
Sure, that's helpful. I have a question on the Madhukar consolidation also. So, if we exclude Madhukar revenue this quarter, what would have been our YOY revenue growth and ARPOB for the quarter?
So, Madhukar is generally that contribute roughly the revenue of roughly 50 crore rupees revenue from the Madhukar, where we provide the medical services and OP services which we run. So that revenue remained more or less flat with the marginal growth. Not much of the impact.
But in the corresponding quarter of previous year, this revenue, the entire revenue must not have been recognized, right? Only the some percentage of that must have been recognized.
So that remains same, Mohit. There is no change in the arrangement. So that arrangement continue to be the same. So there is no change on the data. So the figures are comparable versus last year.
Understood. And just last question on our expenses side. There have been steep increases in employee expenses, both YOY and QOQ. So just want to understand the reason for this, and is it normalized going forward? What is the normalized expense going forward? And similarly for operations and maintenance expenses, these are also up by 120 bits YOY. So for these also, are there any one-offs this quarter, or will these kind of expenses continue?
Yes, Mr. Sanjeev will answer this question to you.
Thanks, Mohit, for your question. As Sir mentioned, there are some new hospitals that have onboarded, which means that we employ more resources, human resources. So an additional expenses that you see are definitely because of that. The repair and maintenance that go up usually is an investment from the organization or the hospital to continue to improve the infrastructure, because Q1 seasonally is a low quarter. We have enough time in our hands to actually invest in improving our infrastructure and expenses. So those are largely why you see these line items showing up. And also the onboarding of doctors in these new hospitals as well as in our existing facilities is also a contribution to the employee costs.
Got it. But as percentage of revenue, will it continue to be elevated in the upcoming quarters because we are adding new capacity as well?
Mohit, Vikas mentioned this side, as we are heading towards the busy season, which is September and December quarter, we expect the staff cost or the employee cost, which we have shown, to be more or less remain the same. And as the revenue grows up, as a percentage, those will get moderated.
Understood. Thank you. I'll get back in the queue.
And also, Mohit, I will appreciate and encourage you to go through our PPT, which is the page number 18, which shows the breakup of our matured hospital and the new hospital and the occupancy basis. On the new hospital, though the percentage of the occupancy has come down, but as a number of the beds occupancy, it has still remained the higher than the last year. So please just go through with that, and if after that any clarification is required, we are available after this conference call.
Sure. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Alankar Garude from Kotak Securities. Please go ahead.
Hi, good afternoon, everyone. Sir, what was our pediatric maternity revenue mix in this quarter?
I think it's 33% is the obstetrics revenue.
Okay, sir. So, I mean, just wanted to understand if I mean, apart from the higher surgical mix, which you mentioned in this quarter, and as well as the higher maternity mix, was there any other reason which drove the strong sequential growth in ARPOB in the newer hospitals?
I think what has happened is, Alankar, is that when you have actually your routine pediatrics is down significantly, when you have your neonatal the business is down, occupancies are down, the both obstetrics and gynae surgeries as well as the pediatric surgeries were extremely short eras. So overall our eras have come down to 2.2, this is the lowest 2.5. And also that most of the surgical these laparoscopic and those things, maximum they stay either 1 to 1.5 days. So that will actually push up the ARPOB to a higher. So that's what we have witnessed. They're not much of a long stay patients. Pediatrics is one which is a kind of the low average revenue per day. That's completely won't be there in this season because of the people moving out on holidays, and also season is not the one which to get admitted. So these are the things which kind of play out to increase ARPOB. And we've done some transplant work and those things. A lot of cardiac surgeries happened in RCHA. These are all the combination of those things actually made ARPOBs are higher.
Understood, sir. And my second question is on Madhukar. I think because just mentioned about a 50 crore of number which was broadly flat on a year-on-year basis. So just from a broader perspective, how is the hospital doing? I mean, is it now in double-digit EBITDA margin at the overall level, console level? And how do you see the traction going forward?
So, you are talking about this Madhukar revenue growth you are talking about, right?
Yeah, I mean, not just the revenues which we recognize, but on an overall basis as well, in general, how the hospital is doing, broad sense on the margins, trajectory.
Yeah, Alankar, I'll take this now. It is actually the last year what we have seen is we have done a decent growth of Madhukar, and what we are witnessing now is that actually the case mix is changing. The lot of surgical component is increasing. ICU started doing very well. OBG is actually we do highest number of deliveries in entire South Delhi. So I think it's kind of looking much better in terms of it. What is important is there to kind of see how do we actually take it further to build the specialties. That's something we are working on that. The international business, which is definitely in Delhi, attracts more international business. That's also we are focusing to build a more international business because we have a long-term plans with Gurgaon and those things. I think one of the major initiative which we are taking now in the current year is that the invest and also do outreach clinics in Africa, East Africa, and also Indian neighborhood countries, and also some of the Russian countries. So this is something which we are trying to we have started doing it. I think some results, early results are coming up. we expect this year to become overall business of international will be 4%. So I think we are looking at very positively up to build more adjacencies, build a business from outside longer distances and also the neighboring countries.
That's helpful, sir. I have more. I'll come back in the queue. Thank you.
Thank you.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Bansi Desai from JP Morgan. Please go ahead.
Yeah, hi, thank you. So my question is on, our expansion plans. Here we have added Coimbatore to be added in FY25. So can you just share more about, this region? What is the potential here? What are your plans in terms of longer term expansion? Do you plan to do a hub and spoke here? And why do we do greenfield again, in this particular asset?
Okay. So, Bansi, we just kind of signed up for the greenfield in Coimbatore. We have seen enough of the buildings for the brownfield project. We could not really find the suitable because locationally it's very important to be in Coimbatore. Avinashi Road is one which is very, very popular and accessible to for the Coimbatore, entire Coimbatore, and also people coming from outside. When it comes to Coimbatore, it's a big medical hub. In the Tier 2 cities, probably is one of the most advanced multi-speciality space, and a lot of referrals comes, and also geographically it is positioned in such a way that the captive kind of population and that offers the medical care is very, very large. So therefore, there is a pediatric space. We have evaluated it. It's only one GKNM and trust hospital is there. I'm sure. I think Coimbatore is probably one of the an important destination, important healthcare destination for a larger part of that affordable class of people in that region. So we are pretty convinced about Coimbatore as a city to go in.
And also, Bansi, to add what Sir has just told, if you look at the whole Tamil Nadu, it is the second largest populated city in the whole Tamil Nadu. So after the Chennai, this is the second largest city. And medical, obviously the requirement for the dedicated mother and child is leaking. So it makes a lot of strategic sense also there to be present there.
Okay, and what would be the investments here? Or should it be in line with what you have said in the past?
Yeah, I think it will be what we agreed to with the owner come builder is about semi-warm shell, and the rest of the capex is probably going to be about close to 70 lakhs per bed. That's what we're looking at it. So that's probably outer limit. That's what I expect to do. It depends on the specialties, what we're going to do it. So its outer limit is about 65 to 70 lakhs per bed.
Okay. Okay. And so in terms of ramp up, therefore, should one assume Coimbatore will also have the ramp up in line with what we've seen in Chennai?
I think I'm very optimistic about Coimbatore because there is no shortage of doctors, number one, and there is no shortage of specialists also, number two, and also there is a need and necessity, and also I know quite a number of people in Coimbatore because Coimbatore is very linked to Andhra. So most of the Coimbatore business people are actually Andhra people. So it's I think when I talk to people, they are pretty optimistic about the need of children's hospitals and also the peripheries, whether it is Tirupur, Road, Palghat. There's a huge area of draining. They're all very affordable.
Okay, this is helpful, sir. Thank you.
Thanks, Bansi.
Thank you. Reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Damayanti Karai from HSBC. Please go ahead.
Hi. Thank you for the opportunity. My first question, earlier you used to give a revenue split between mature and new units. I could not see this time. So can you specify that?
Yeah. So Damayanti, it is basically a derivative figure only. So, we have given the number of occupied beds. We have also given the occupancy and ARPOB. So if you were to, it's a derivative number. If you were to multiply this, Damayanti, you will get the revenue split between matured and the new hospitals. On slide number 18, Damayanti.
Yeah. And my second question is in ARPOB. So a 14% growth year on year. Earlier you indicated 5 to 6% annual growth here. So can you just split this 14% into its drivers? Like what are the major contributors, etc.? And related question is, in the new units, we have seen very strong 30% year-on-year increase in ARPOB. If you can explain that also.
So Damayanti, let me take this. So ARPOB increase on the console basis 14%. So is a function of what is the LOS. So if you look at the LOS has come down by 7%. So the balance explains the ARPP growth, which or the specialty case mix, complex mix, which we have taken. So that is the ARPOB increase. As far as your second question in terms of new units ARPOB increase, obviously this new units, since they are making the trajectory towards the mature, we have a more flexibility towards the price increase. Second, the more complex works comes to the hospitals. As the hospitals keeps increasing their journey to the maturity, the name and fame of the hospital doctors is spread over, and you get a more complex work. So that also explains partially about the ARPOB increase. Though the 16% LOS adjustment is there, but 14% type you can say is the complex work plus the price change which we have undertaken.
Price is also a major contributor here for new units, right?
Sorry, Bansi. Sorry, Damayanti.
No, I'm saying for new units, a price hike is also a major contributor here.
Yeah. So the price hike plus the complexity of the work which we do. So it's a combination of both, right? So as the new units, march towards the maturity, the name and doctor's name, etc., it spreads over. So initially, whenever you open the hospital, you will get the basic type of work. As the hospital matures, the more complex works keeps coming. So that is what is explains. So 16% is the LOS change, and the balance is the case mix plus the your price change.
Okay. So for annual console basis, how should we look at ARPOB now? Like earlier you said somewhere mid-single digit growth looks sustainable. So are you going to revise it up or maintain it?
So if the LOS remains at the same level which we have shown, you should assume it is fair to see that it should be between the 5 to 6% growth of the ARPOB. Yeah.
Okay.
It is a very reasonable level of ARPOB, right?
Yeah.
We should be there.
Mm-hmm. And my last question is, one of your multi-speciality peer who is based in basically Andhra, Telangana spoke about stepping up their effort in mother and child care segment. So do you think in your core market you will be seeing higher competition from such players like who are stepping up efforts there?
No, we always had some competition. Actually, competition made us better over a period of time. Of course, there is now with the kind of with awareness, various things, that more people are trying to start children's hospitals. Few chains are coming up. We'll have to see how things are going to be. I'm not too worried about it because we are not a mother and baby or mother and child hospital. We are a pediatric multi-specialty. Our segment is very different. We dominantly play a pediatric, the sick kids and more intensive case, more specialty game. We also do other things also. But that will definitely protect us because that's what a lot of earlier some children's hospitals were started. they become our referral centers. Maybe I think we'll have to see that, how to convert them as a kind of a referral centers to you for tertiary and quaternary care. I think any growth and development in the healthcare, we should welcome them. It's a positive competition, which is obviously the pie is big, so definitely people, as long as they're disciplined and healthy competition, is good for healthcare.
So you are not much worried on competition which might come on the talent side, right? If there is more demand for pediatric specialists, etc., you remain confident about retaining your best doctors, etc. Or how do you see that?
Yes, the doctors. The thing is, the doctors who work with us they're in a very different engagement model. Their clinical aspirations are very different. So most of them, specialty doctors, won't go and thrive in the mother and child hospitals. It is only kind of the newborn specialists are the ones who actually go. But there is enough supply of newborn specialists nowadays. It's not a problem. So none of these mother and child hospitals can actually build up pediatric intensive care because that's a lot more complex and intensive that it takes a long time to build it. So actually the mother and child is a very simple model, which is a basic pediatric, baby care, pediatric care, and a maternity. So that's a very simple model to do it. So it'll be easily replicable, but what Rainbow is not about mother and child. It's a multi-specialty pediatric hospital and also comprehensive perinatal side. So we have a very, very different play in that space.
Okay, sir. Thank you for your response. I'll get back in the queue.
Thank you. The next question is from the line of Rahul Jeewani from IIFL Securities. Please go ahead.
Yeah, hi sir. Sir, this 14% ARPOB growth which we saw during the quarter, can you quantify what would have been the contribution of insurance price revisions in the Hyderabad market if that did take place during the quarter?
Hi Rahul. So the 14% ARPOB growth, some adjustment you have to do for the loss, which is 7% came down. So the impact of that you have to adjust it. The balance 7-8% you can assume roughly 2 to 3% from the insurance.
Okay. So out of the 7%, 2 to 3% was insurance price revisions, and the rest would have been cash increases or a better case mix.
Yeah, clinical.
But sir, the better case mix got reflected in ALOS, no? So which is driving your lower ALOS.
Yeah. So some price hike which we have taken from the 1st April this year, so that also contributing towards that.
Okay, and what was the quantum of price increases on the cash business?
Between various services, there has been changes on an average roughly 5%.
Okay, sure, sir. And sir, on these two new hospitals which you commissioned, you said that Financial District Hyderabad was able to achieve EBITDA break-even within a 3-month period. So if you can quantify a similar timeline for OMR Chennai.
So OMR Chennai, you should also take the trajectory that, next September quarter, this coming September quarter, and December quarter, it should be EBITDA positive.
Okay, so then Chennai would have taken almost a 12 to 15 month period to achieve that, to achieve EBITDA break-even.
Because it started in September, it is a very marginal negative EBITDA actually. So by September and December, when the seasons picks up, we remain very confident that it will be EBITDA positive.
No.
Okay, sure.
What happens to us is that now Hyderabad is different because we do the beds for the demand. Okay, so we them coming with the 2 more units now. Another 120 beds are going to come in Hyderabad this second half of the financial year. So all these beds, almost like 100 beds have come in over 3-4 months ago. This almost 220 beds have come up. These are all the beds are for the demand, the future needs of the Rainbow. So when we do for demand, naturally that your EBITDA is so positive. You've got a established clientele already. Your doctor pool is also kind of get redistributed between the facilities. much easier game for us. When you go to any other cities, we are doing a spokes to kind of cover the wider part of the city. So they will take definitely based on the spoke, it will take 12 to 18 months time. That's the kind of guidance, general guidance we give. For the spokes in Bangalore or Chennai, will take about 12 to 18 months time.
Sure, sir. And sir, using that background, given that we are adding 270 incremental beds this year, out of which roughly 60% would be outside of the core Hyderabad market, so how do you look at your overall EBITDA margin profile playing out this year?
There will be some pressure on EBITDA, but I don't think we're going to have a kind of a serious headwinds because the units are coming in Bangalore, and one unit is coming in Bangalore, one unit is coming in Chennai once again. So I wouldn't see the huge challenge in Bangalore, and Chennai is probably kind of will take time, but it's going to come towards the end of the year. So overall for the year's trajectory, I wouldn't see a kind of a major challenges. Of course, having a beds definitely it optimizes the occupancy, number one. It will definitely have some impact on the EBITDA, but I don't think it will be a very, very significant.
The quantification of that is a little difficult, Rahul. So there will be some impact, but how much that we have to see as we progress.
Sure, sir. And one last question from me before I join back the queue. So because can you just reconfirm the net cash and the capex numbers which you called out? So I think you said 470 crore of net cash on balance sheet. So is that after the 190 crore of capex which we did during the quarter?
That's correct. So as on 30th of June, we had the cash balance of 474 crore rupees. That's correct understanding.
And this is after accounting for 187 crore of capex during the quarter?
Correct.
So sir, then the cash generation in 1Q seems to be a very high number because end of last year, our net cash position was somewhere around 390 crore. And despite this incremental capex, our cash on books has gone up. So can you comment in terms of what led to this strong cash generation in the first quarter?
This 474, Rahul, is inclusive of this IPO fund, which is lying 120 crore rupees with us. So you are counting that along with this?
Yeah, sorry. So yeah, okay, sure. Get it. Thank you. I said some mistake.
Thank
So
you.
net of that will be roughly 354 crore rupees, which will be internal cash accruals, and 120 is the IPO funds.
Sure, sir. Thank you.
Thank you.
Rahul.
The next question is from the line of Harsh Bhatia from Bandhan Mutual Fund. Please go ahead.
Yeah, good afternoon. Thank you. Two quick clarifications. One, in terms of the price
Mr.
hikes.
Bhatia, this is the operator. I'm sorry to interrupt. May I please request you to speak a bit louder?
Yeah, is this better?
Yes, sir, you may proceed. Thank you.
Yeah, sorry. Two quick clarifications. One, in terms of the price hikes, you mentioned 2 to 3% price hike in the insurance part and 5 to 6% in the cash business. Is that the right number?
No, so what we have told is the 5% is the cash increase which has happened in the tariff which we have taken on the blended basis. On an average, this is the increase. The tariff increase for the insurance was for the Hyderabad cluster only, and the impact was on the revenue was roughly 2%. So that is what we were telling.
Okay. And pointing to one of the previous comments made during the call, with the 110 beds that are already added and the 270 beds that will be added, did we mean that we should be building in a blended occupancy of 50% for the entire year? I think so. That's what I could understand from the previous comments.
Yeah, that's what we're aiming at. Kind of the annual average of bed occupancy this year, probably we're kind of aiming at about 50%, including our new units.
Okay, sir. All right. Thank you.
Thank you. The next question is from the line of Binu from Elara Capital. Please go ahead.
Hi. Thank you. Just a quick clarification. What is the timeline for this Coimbatore hospital?
So the Coimbatore, we are expecting it should be operational since it is a green field, and as MD sir has told that warm shell will be given by the builder. So we are expecting it to be operationalized sometime in FY 25-26, which is 2 years from here.
2 years. Okay. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Rishabh Tiwari from Allegro Capital. Please go ahead.
Hi. Just wanted to confirm the number of beds or the capacity that we are planning for Coimbatore.
120.
It is 100 beds.
125.
125 beds, Rishabh.
Okay. Thank you.
Mr. Tiwari, you may go ahead with your question, sir.
Yeah. Thanks. I'm done.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Rahul Javani from IIFL Securities. Please go ahead.
Sir, can you also comment in terms of how our profitability has been trending in the Delhi NCR market, which has been a drag for us, and any update with respect to the intercorporate loans which we had extended to Madhukar in terms of getting that money back?
Rahul, so Delhi, as sir has just briefed you, we are doing a lot of work there, and we plan the profitability in the overall period it will grow. As far as Madhukar advances is concerned, during the last quarter, we have got roughly 1.5 crore rupees back from them. So as on date, the whole exposure outstanding, including interest, is roughly 42 crore rupees with Madhukar, and we remain confident that the unit is doing very well, and we will recover this amount over a period of time. So there is no cause of worry for us on this.
Okay, so 1.5 crore we got last quarter, and outstanding is 42 crores.
Yes, this is excluding the security deposit which we have given. This is the 42 crore rupees is the loan and plus interest which is accrued.
Okay, sure, sir. And sir, with respect to, let's say, your capex, so one you obviously saw a higher number on account of this payment for the Gurgaon land parcel. But how are you looking at capex spend for the rest of this year and then next 2 years?
Great question, Rahul. So we are expanding something like that, including Gurugram. We are just building roughly 930 beds, which the overall cost can be roughly, between 800 to 900 crore rupees. Out of that, 474 crore rupees cash is lying with us, and these capex is spread over of the next 4 years, including this year, the balance of this year, and we remain confident with the cash generation which we are doing every year, plus the cash balance with us, will still remain a cash positive company with completion of all the capex plan which we have announced so far.
Sure, but sir, would our annual capex run rate, except this land parcel which we acquired, continue to be around 170 to 175 crore kind of an annual number? Or you think that your number could be on the higher side?
So as we progress, Rahul, as the capex plan is taking steam, and then we are opening 4 hospitals, and next year also we have scheduled 2 hospitals and onward. So the capex speed will be slightly higher. We expect roughly 200 to 225 crore rupees to be spent next year.
Okay, sure, sir. Yeah, that's it. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Rishabh Tiwari from Allegro Capital. Please go ahead.
So just a follow-up on the CapEx run rate. Out of the 200 to 225 crores that we are planning, how much of it would be routine CapEx? Would it be around 170, 180?
No, routine CapEx is not so high for us. It is between 20 to 25 crore rupees for full year. It's not high for us.
Okay, so rest of it would be towards projects.
Correct.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments. Thank you, and over to you all.
No, thank you very much, ladies and gentlemen. I think very insightful questions. And yeah, as I said, we remain very positive for the year, and there's a lot of execution and as well as great operations. So we were happy to answer any of your queries. Please connect with our investor relations, which is available on the deck for you, and CFO, Mr. Vikas Maheshwari, and Saurabh Bhandari. So both of them will take answers, will answer your questions. Thank you very much once again. Hope to see you soon. Thank you.
Thank you. On behalf of IIFL Securities Limited, we conclude today's conference. Thank you all for joining.
आपण ज्या व्यक्तीशी बोलत आहात